Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin. Will it bounce? If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So, several days ago, we put out a video, and in that video, I outlined several reasons why I thought that the $40,000 level should provide some macro support, at least in the short term. All right. And we went through about 6 different reasons why I thought that we should be able to see a bounce by Bitcoin off of the $40,000 level. Now, since then, we moved up to $44,000 and then back down to about 42K, 42 to 43K. And I've had some people ask me, well, is that the bounce, right? Is that the bounce you were talking about? My friends, no one is getting out of bed for a $43,000 Bitcoin. So while technically it is a little bit of a bounce, right? It's a bounce for ants, right? So far, this is just nothing more than a bounce for ants. And none of us are getting out of bed for a $42,000 or $43,000 Bitcoin. Not when Bitcoin was at $52,000 just a couple weeks ago. So just to reiterate, some of the reasons why I would like to see a bounce, why I think we could continue to see a bounce. And then I'll talk about, some of the major headwinds that could limit it. But let's go ahead and dive in. So the first one, again, as we said before, is the market structure that we've seen at around the 40K level. Okay, so it seems reasonable, right? It seems reasonable that we should see a bounce. This was resistance and resistance and resistance, and then it became some level of support. Now we're trying to hold it as support again. So that's one thing, is the macro resistance. It's one thing. Now, another thing that's kind of interesting, and it's actually a little bit counterintuitive, is we're actually about to get a death cross. And not all death crosses, but I think more often than not with Bitcoin, death crosses end up leading into a pump. Now, not every time, as you would easily note. There was a time back over here in the summer, we had a death cross and we actually continued to bleed for a few more weeks before we actually saw a pump. But there have been plenty of death crosses in the past where after or going into a death cross, you get a nice pump going into it. Here was one, and then here was another one, this pump going into this death cross right here. So from that sense, I would argue that, because we're getting that death cross just right about now, that actually might even provide further evidence. Okay, so let's just note these down so that we are sort of just taking some notes. So we have the 40K macro support. So we have support at 40K, theoretically anyways, right? We have the death cross. So we'll call it, it's kind of hard to write with this mouse, but we'll call it the death cross pump. Okay, so we'll call it the death cross pump. Furthermore, we have the dollar is dropping quickly. Look at this. And the reason why I wanted to draw your attention to the dollar dropping quickly is because if you go out to the macro, you know that when the dollar is going down, this tends to be the best for Bitcoin. For instance, you see this downward movement right here? This was when Bitcoin was going absolutely crazy, and so was this one. But again, you shouldn't take my word for it. Let's just compare it. So what we're going to do is we're going to pull up Bitcoin USD on this chart, and we're going to simply overlay it. And what I'm going to do, now that it's up here, is we're going to switch this over to a new scale. And then we'll make it, well, I guess that one's log. But what you'll see here is that when the dollar was going down here, that was Bitcoin, a parabolic rally by Bitcoin. When the dollar was going down here, that was a parabolic rally by Bitcoin. Now the dollar's going down again. I'm a little skeptical as to Bitcoin immediately going parabolic. I think we need a bit more time, but certainly the dollar going down is not a bad thing for Bitcoin. So that I would argue that the dollar DXY going down is a good thing. So then you clearly have three indicators right there. The fourth reason, and I'm sort of reiterating what we covered the other day, but I wanted to provide a little bit more this time just because we had more stuff. The fourth thing is we held the line at 40K back in September, and again, I understand that if we go below 40K, this is completely invalid. I mean, if we're putting in weekly closes, of course, it's completely invalidated. And we probably can't really use it anymore. But the whole idea is that historically, when you hold the line at the 20-week SMA, we tend to hold that level as support in the future, or we just never visit that level again. Okay, we've seen that happen. We've seen that happen many times in the past. When you hold the line at a level, you never go below it. And this is something that I'm not necessarily saying it can't happen. Obviously, if you were to fast forward 100 years from now, I'm sure there will be times when we don't hold the line, or we hold the line at some point and then we go below that price later on. But I'm just noting that the hold the line conjecture is still theoretically valid until we actually get some closes down in that level. Okay, and so far, it's holding. So, and I guess I should not. Where did the writing go? Well, that's unfortunate. I had the writing on here. Maybe it was over here. There it was. So, basically, the idea here is you have the 40K macro support. You have potentially a big potentially, right, death cross pump. You have the dollar going down, okay? We have the hold the line. We'll call it the hold the line conjecture, hold the line theory. And we'll just say that's number 4. Now, number 5 is one of the same ones we mentioned the other day, and it's the fear and greed, right? So we'll say the fear and greed. And this is one of those things where, where when you look at it, we know that we can stay in fearful territory for long periods of time in a row, but this just shows you kind of like what we're looking at here, right? We had a lot of fear over here, a lot of greed, or a lot of fear. We bounced. We had a lot of fear right here, and we bounced. We're in fear again. Again, there are no guarantees. We were in fear in 2018, and we saw bounces, but they were bounces for ants. Okay, but at least it's a point, right? It's a point to say, the fear, and it looks like I spelled out fear and grid. So we'll say fear and greed. So we have the 40K macro support, we have the death cross pump, we have the dollar down, we have the hold the line conjecture, we have the fear and greed down. Now the other thing I guess we would look at would be the RSI again. I mean, the other day it was technically oversold. I don't know that it still is oversold though, especially after the pump that we've had recently. So let's go see if in fact it is. So we'll go look at, or not the moving average, we'll go look at the RSI. And what we're going to do, by the way, is we're just going to see, okay, where is it on the daily. So it's not quite as oversold as it was, but it's still only at around 34 or 35. So theoretically, it should have room to move up from where it currently is. If you look at it on some longer time frames, of course, this was an area that we did once hold on the weekly, right? So if you go look at the weekly time frame, this is where we once upon a time did bounce, and that was back in the summer of 2021. So then going back here, number 6, again, we would just say the RSI, right? The RSI is close to oversold, right? It's close to oversold. Okay, I'll just say closely oversold. Okay, and then from here, number 7, right? So number 7 is let me go back to this chart. So the other thing we're looking at here, number 7, is if you go and look at the Heikin-Ashi candles on the 1 day time frame, we are at least trying to break out here, right? Like, and again, we're currently in this one, so I know right now it's red. Of course, it could end up being green. We still have a long way to go for this one. But you sometimes, when you get these momentum shifts on these lower time frames, remember that's what ultimately leads to the momentum shifts on the larger time frames. And so, could it be just a fake out like we had this one here and this one here? It could definitely be that. We go to the 3-day, and we're seeing a little bit of green, right? A little bit of green here. But again, all of this precedes the weekly eventually turning green. And so we haven't gotten that yet. And we're looking at about 8 red candles in a row. And so again, I go back over here and I just say, well, we are seeing some momentum shifts on the Heikin-Ashi candles. Is it enough to be believable? No, not necessarily. I'm not saying you should take it to the bank or anything. Again, it is more or less just a lagging indicator. But it does show some signs of life in the short term, okay? But clearly a long way to go before it is showing signs of life more in the long term. But I would say there's plenty of reasons to think that Bitcoin could bounce off of this level. Clearly, if it does bounce, then we have to contend with other things like the bull market support band, getting back above, say, 53K, holding it at support, ultimately getting into new all-time highs. I mean, that's a whole different story, a completely different story that we'll have to talk about if we get a bounce. The main headwind I could see for Bitcoin here in the short term is the stock market, okay? And if you go look at, say, like the NASDAQ, it's been getting hammered recently. And we know that if the NASDAQ, if the stock market, if the S&P, SPY, the NASDAQ, if they're coming back down, it does tend to make it somewhat difficult for Bitcoin to rally. So, if we open up the next few days on the NASDAQ and the S&P and it's just red day in and day out, it will make it challenging for Bitcoin to immediately bounce. But when we made that video a week ago, again, we were $1,000 or so below where we currently are, and we did get a small bounce. But again, we're not really looking for just like a $1,000 or a $2,000 bounce. We'd obviously like to see a lot more than that. And then, of course, the other idea, the last point that I wanted to talk about again was the idea of potential Wyckoff accumulation. I mean, this is, again, I've heard Wyckoff accumulation enough times in the last year to last the rest of my life, if I'm being completely honest. But just kind of looking at this pattern playing out, we are seeing some similarities, okay? And I feel like it'd be foolish to completely discount the similarities, but it's there. And if it were to continue to play out, then it seems reasonable that Bitcoin could bounce even up to $47,000. And if it were to continue to follow that path, it would mean revisiting these levels actually in a few weeks and then bouncing. Again, do not expect fractals to play out exactly in the same way from say one prior move to another, but you can see that we have seen these similar types of moves before, and that was where we ultimately held the line down here, and we had 3 key tests of it. So the last major point here, I guess, would just be the idea of the Wyckoff accumulation. Okay, so Wyckoff accumulation, and there you have it. I mean, these are some of the reasons I already outlined in the prior video. And then maybe there's a couple more reasons that we have now. For instance, there's the dollar down. When we made the last video a week ago, the dollar wasn't really moving. It wasn't really looking that bad. But now you can see there has been a momentum shift here, and it has been coming down some recently. So anyways, let me know what you guys think. Do you guys agree with me? Do you disagree? Do you think we're going to get a bounce? Do you think we're destined to go down 30K or 20K or something like that? Let me know in the comments. Thank you guys for tuning in. Subscribe. Give the video a thumbs up. We have the premium list at intothecryptoverse.com. And I'll see you next time. Bye.